Hey guys, this is Simon with Trade and Perform Coaching. We are going to do a trade review today, and it's really more of a journaling exercise. We're going to look at what we plan to do versus what actually happened, and then where we could have or should have done better, or otherwise said where we'd want to take the trade next time that opportunity presents itself, right? So I'm going to kind of set it up quickly, how the day was looking before we came in, and then go through the price action and describe mainly what my thought process was and where my hesitations were to be being overly aggressive versus, oh, we've got them now, I can see it, right? So before we do that, let's do the disclaimer here, which I have somewhere in here, I think. There we are. Okay. Legal notice, important disclaimer and reminder for all traders and investors. This webinar is for educational purposes only and not a recommendation to buy or sell any particular financial instrument. Equities, futures, options, and currency trading have large potential rewards but also large potential risk. You must be aware of the risks and be willing to accept them in order to invest in the futures and options markets. Absolutely do not trade with money you cannot afford to lose. The website is neither a solicitation nor an offer to buy or sell equities, futures, or options. No representation is being made that any account will or is likely to achieve profits or losses similar to the performance or losses similar to those discussed on this channel. Past performance of any trading system or methodology is not necessarily indicative of future results. Absolutely consult your registered financial advisor or your risk trading plan before ever investing or trading any financial instrument. Okay, so as I was saying right before we came on, my specialty, or what I'm really good at, is setting up support resistance zones, and initially started off with identifying key locations where I thought we would get reversals. So when we came into the day, the chart looked like, okay, so this wasn't here, this wasn't here, this was here, I think, because that was Monday's volume point of control. Maybe it was this. It was 85.50 to, that's right, just about. Guys, can someone tell me where the white, oh, I got it. It was 83, okay, so that's it. Right there, I got it. That wasn't there. Okay, this is Monday's volume point of control. This was the white zone. And this was, what was this? Why did we have this marked off as a key area? I had that marked down for some reason, and I forget what that was. Okay, I'll remember in just a moment. We had that marked off. Oh, that was, I forget what we had that. Does anyone remember why I marked that off earlier? If they do, please remind me, guys, in the room. I don't remember why we had that marked off. But obviously, Monday's low was the zone. This wasn't here, right? And then this was the uptrend from the last couple of days. Okay, so we came into the day. The first thing we went through our checklist, right? We had a narrow range. So the first thing I said was, we want to see if the market gets above or below that range. NQ, coming into the day before it had rolled down, right? If we look at the hourly, NQ also had a very narrow range and was banging up. It really didn't roll down all night long. We're setting higher lows, higher highs, and we said the point that it had to break at the minimum was to get back below this 55.80 before it's bearish, right? And then also essentially the other thing I pointed out after the open was that the mid of the whole day and then the mid of the RTH, which was approximately this location, right? Those were the two most important areas I thought on the chart. But importantly, unless we got past those mids, there's nothing bearish, right? So they're obviously hanging NQ up. ES has, and then the key to that was just that ES has a hard time going down against NQ. But what you'll notice is out of the gate on NQ, when we look at the 15-minute chart, right, it's very easy to see. Essentially started with, wow, I can't grab this. There we go. Here we are. Okay, so first clue that there might be an issue. NQ opens up. This is a 15-minute chart, and we essentially get open drive lower, right? You can see it with a 5-minute chart as well. Okay, here's the beginning of the day. This is the open. 1, 2, 3, 4 bars. And if we were anywhere but the very tippy top of the range, right? Or if this had been accompanied by first a gap down, then this series of bars, I would have immediately gone into open drive lower, right? The angle of attack, which is very important, and I said so, right, was extremely steep, and I wanted to see that decline, right? And then we went right into our checklist, right? Can we get a 5-minute bar to close above another prior 5-minute bar? And then we have our 15-minute check off as well, right? So you can see all the way through here, you got your backside saved if you're trading in Q, but first of all, also, ES has been, if you look at let me slow that down. If you contrast the behavior of ES, and let's erase this. If we come into the day, if you contrast the behavior of ES has gotten hung up. It's been building energy. You cannot auction 2390 to 2380 more than we have, right? It's 1, 2, 3, 4, 5, 6 days of balance. We're looking for a move out of balance. That, by definition, has to be accompanied by either trading above 2390 or below 2380. It's the only way that we can move out of balance. We haven't accomplished that yet. Maybe we will either tonight after Apple or tomorrow after the Fed. One of the two, but we're clearly disinclined to do it today, right? There's just no energy being built, okay? The next thing that we noted when we were in the day is that even though NQ was driving lower, my hat's off to Bill, thank you, because he pointed this out, is when we're coming into the day, what's the first thing we're trying to figure out? Well, is this a legit open drive lower? Well, if we go to our checklist on open drive lower, it had some of the characteristics. It was, if you take away the first bar, it was delayed open drive lower. The gap fill got blown through. Again, for my gap fill guys, right, to think gap fill's it. Great example of how gap fill is a 50-50 deal. Some days it works beautifully. Some days it just blows right through. And it's the very reason why I do not like trading gap fill. Okay, we knew that Monday was that this was Monday's volume point of control. Thank you. 2384 and a quarter. That's what this is down here. Was Globex low. That's why I had that marked off. So got it. 84 and a quarter. Thank you. I knew I had it there for a reason. There we go. Okay. And then the other thing I said was the overnight range was so narrow and the volume was so little volume was done overnight that I didn't think Globex high or Globex low had any importance. So I'm going to set this off with a different color so we know that it's not Globex high and low. There we go. So this is Monday's volume point of control. It was within Globex high and low, which had, and we said before open, right? Much narrower range than we had the prior day. Yesterday was 10 points of range, 4 points of range. You generally want to wait to see if you can get outside of that of the Globex high and low, and then establish that as a support or resistance point. And that's exactly what it did, right? So then Bill pointed out, right? We have what looks like an open drive lower, but look how little participation there is in the broader market as measured by the NYSE tick, right? There's no strength here. So the first thing that we knew in that process was, number one, they couldn't get it below Monday's low, right? Check off. In order to move lower, right, it's such a basic principle, but we forget about it all the time. You have to get below Monday's low to be bearish on any time frame, right? So the next thing is the tick is on a normal day, whether we're trending up or not, we'll normally find a way to tag plus 600 or minus 600. You'll notice on this entire day, we have not been able to tag, meaning close like this at 600 or above 600 all day long. That generally indicates, right, when we can get a close above or below, like I said, that we can start with two-sided action. And if you'll look, we have not had two-sided action. We've transitioned. We started off with PA that went straight down. We transitioned to PA that went straight across, but in a very narrow range. You would be only the most exuberant people in the world would call this two-sided action, right? And then we turned and went straight back up and mirror imaged it with no counter rotations again, right? That's not two-sided trading. That's directional trading. One way, tight sideways chop, which kills most traders, right, when they get overactive in this, and then straight up, right? Which means if you try to short the mid, which was right over here, you took a loss. So it looks, to the unexperienced eye, it looks very harmless, right? But you know if you're at all emotionally anxious, if you don't have what I like to call a sniper's mindset, right, where you know exactly what you're looking for and exactly what your kill shot looks like, okay, it's very easy to overtrade this. Okay, so as we're pushing through the day and we get this this push down, as we push into the low here, we get the slightest, and I mean the slightest of tick divergence right here, right? And what I pointed out was, yes, we have tick divergence. What was the problem with it? There wasn't very much energy to the tick divergence, right? So I want to be clear what happens. When the market starts to expand range, right, you will get what I'd refer to as minor tick divergences, which is what this is because of where it's occurring, the negative 400 area, right? And then it'll come back to zero, and then sellers will step in and slam you down. Even to a negative 600 tick would have likely taken this into Monday's low. Additionally, in making our decision as to whether to get long here or not, our degree of attack is still greater than 50 degrees, which means the market's in momentum, right? So the risk there, and I'm going to use CL to demonstrate that, is when your angle of attack and everything is pointed down, right, you can end up with moves that look very much like this, right? So you're faced with a pretty tough decision, right? Now you'll note, look at the difference in the way CL behaved versus the way that ES behaved. ES went from a downtrend to complete sideways consolidation. CL, on the other hand, which is a momentum product, right, constantly made lower highs, lower lows, and couldn't get one bar to close over another on any time frame except the 5-minute bar, right? And we came into our support at 48.38 and attempted to hold it, but still could not get a close above on almost any time frame for a push above, and never penetrated its downtrend, right? On the other hand, we did penetrate our downtrend on ES, right? So this right here, when we got this price action, this told us of the potential for things to change, and now that threw us into a conundrum, right? We've got slight tick divergence. We've got a rotation from 88 to 82. That's only 6 points, right? So that causes a conflict in my book that I'm actively trying to resolve, right? I know historically when I try to trade smaller than 10-point rotations, my odds of getting swept on that rotation increase dramatically, which causes me to have to make one of two decisions. Either I'm going to accept a small stop, right, or I'm going to get a large stop in a narrow range, right, or what most people try to do, and they try to compromise. And I was just speaking with someone who improved their trading dramatically, and they'll go, well, I'm going to take it with a 2-point stop. And I had demonstrated within here when, this is a great example, right? We'd gotten overbought here, and I was saying, look, it's not a short because there's only a 2-point counter rotation, but this is the type of bar I'd be waiting for to get continuation lower. But what was the problem? Did it continue lower? Yeah, it did. But again, if you used a tight stop, i.e. 2 points, it came out and stopped you right here. It wasn't sufficient for you to ever get over to the point where it was even remotely profitable. Even by a tick or two, you got tagged out first. And this is a big issue, right? Because if you get stopped here, then you go, it gets over here and you go, I knew it was short, and you try to short it again here. And then it comes back up against you again. Well, this time it goes to profitable, but not profitable enough, and then you get stopped a second time, right? Then you get flustered, and you go, well, now it must be long. I'm going to go long the first pullback, and you get stopped again. That's the series of how people end up losing 4 and 5 points through a course of a day because they get flustered because their first trade didn't work, right? So the easiest filter on this was 2-point rotation. I don't short 2-point rotations. Additionally, so I'm going to pause there and see if anyone has any questions yet. Is everyone with me to this point on what's going on? We have some challenges because we've opened up with a pseudo open drive lower that's failed to break the prior day's low, which negates a lot of its strength, right? We've got price action that's no longer trending down. We've got tick that's not showing heavy sell participation in the broader market, right? And we've got targets where we'd like to get long, which, by the way, still have not tested in the lower market. This 77.50 got tested on Sunday evening's Asia Open. 75.75 is the mid of the open gap. And finally, a retest to 74, the mid-high, and then a 24-hour HVN at 73.72. This is what we want. Of course, this is what everyone else wants too. And then we're also contending with the fact that through the RTH, this is an unauctioned area, and you can get slippage through here pretty easily. And then also we had a high of 88.75, 89, right? So what do we want? We'd like to see it penetrate down to 79 area, untested high volume node, and Friday's naked volume point of control for a response, right? What we didn't want is a one tick of the zone that's 1 point away from Monday's low and what was already a tight range. And the reason why I say that is because when I look at someone else's chart, or like when I go look at Twitter or stock twits and certain people I follow and they go, well, the market followed our trade plan to perfection, scenario 1, right? Well, shit. I can show you 100 markets where 9-point rotation, where you have key untested levels below, you took that trade and all you did was rack up stops, right? So now the question comes in, the real question is, well, how did I know to take this trade, right? And we've been doing a lot of talk in the market about battle zones and realizing where's the line of scrimmage, or a rugby scrum, if you will, where they're trying to advance the ball. And so if we switch this out to a 5-minute chart, right? You can see where the tips of where the dojis are showing up. I'm talking about really generally, for a matter of speaking. See how we just simply could not close above this point at 84, and then we could not close physically below this point. So the first thing I said when we were in here, what are we looking for to figure out if this is a low? What I said is I wanted some type of delta push, a heavy push and tick with an inability to break the low, or what would have been ideal would have been a bar that looked like this, where we came down and we wicked below, we pushed below, but instead of closing like this, it actually physically closed below the low. Instead, it looked like a bar like this, where the body of the bar was here and the wick was down here, and hopefully on heavy tick. And what that would have told me was that sellers, as a group, team sell, made a huge effort to break team buy, right? They put a lot of effort in. They got the price below the low of the day. People panicked, and then they were unable to sustain that bar, and it closed back in. And once that happened, everyone would be trapped, and then they would push up. That was our A-grade scenario on this, assuming, and then our alternative to that would have been, had the bar been like this, well, then our preferable scenario would have been tick divergence into key locations lower. So we had a plan, right? At the end of the day, we had a plan to deal with what we were looking at. But there was a third choice, right, which we've been discussing. I've been coaching this a lot in my one-on-one coaching sessions because I think it's critical. We know that Team Sell made a huge effort up here, right? And we know that Team Buy has made a huge effort down here. This is the line of scrimmage, and whichever team was able to move beyond that line of scrimmage first, the other team would most likely have to fold. Why is that? We spent a lot of time here. Time is a big factor in building energy in the market. And generally speaking, people know the range is small, and so they don't want to overreact, right? You get people very excited thinking we're going to come down and test that 77, 75, 70 location, right? Those guys are seeing open drive lower, and you got to remember most traders don't meditate. They don't do a very good job of keeping their emotions in check. They don't trade with a checklist. These are retail traders, right? And they trade purely off emotion and whatever they think they can figure out in real time, except that we also know from clear research that when you are under duress, you do not think clearly, you do not make good decisions, and you tend to make emotional decisions. So I knew, and I said, shorts are probably building in this area for people trying to get a continuation push to the downside, right? Anyone have any questions to this point, guys? Because I can pause, and the idea is to let y'all ask questions while I'm doing this and not just go monologue. Let me check the Skype as well. Thank you. 2385.75 was the point of control as well. Right. And then the other part that was making it tricky, right, was that 84.75, right? Everyone sees, oh, but we're holding underneath Globex low, right? But you have to know that a tight range on Globex low negates its value, right? Okay, so I'm watching the conversation box. Simon, is it possible to do a divergent? I do not believe in divergence on CL. I haven't found a reliable read on that yet, Tom. I do believe there's a price action set up that works, but I don't have a divergence there. I certainly don't use that indicator I use for momentum. I don't trust the divergence on it. Okay, so let's continue. So what do we actually, those were our three scenarios. And then I said the last scenario is if we close above this, we push up, right? There's several considerations to take in this, right? The best scenario for us from a risk profile would have been for the market to pull off this bar right here, right? Where we close like this with a big wick. Why? We could take it right at the low, put a stop right here, and as long as it didn't penetrate that low, we had a free shot all the way up. That was the best. Minimum amount of risk. We could put on the maximum amount of leverage because of where it was located relative to the low, right? And we could take that shot, and I can live with that stop all day long, right? So what actually happened was we did get that bar, right? This bar right here that told us, right, that sellers put a huge effort in pushing down. But look at what the result was from that huge effort of pushing down. So this is the first time we closed above right here, right? So if you were uber aggressive, you just took it, but it wasn't exceptionally pretty, right? It wasn't close above, but it wasn't exceptionally pretty. So if you saw this, right, so now I'm going to go back to someone I was working with the other day. The client goes, but Simon, I can only use 2 points of stop, right? That's what my trade plan says. That's what I can actually afford. And you're caught in that conflict. The trade plan you want, the stop you want, the stop you can afford, and then the stop the market demands. The stop that the market demands is approximately 1 point below this swing low in my book. Okay, that allows you to get 1 or 2 ticks below the low and still have the trade work while still keeping you relatively safe, right? So if this is your entry right up here, that means your entry was roughly 84 1/4 and your stop would be 81 1/4. So you have to stop and think at this point and roll back to your trade plan, right? I have 3 choices here. If my stop is 2 points max, I can cut trade size, right? I could go back and look and say, okay, my stop was 81 1/4. I can add 2 points. I can go long 83 1/4, which, by the way, you could have gotten right here and right here, right? Still gives you a 2 point stop at that point, right? Or you can simply say, I'll bear the risk. I've had enough profitable trades that it can exceed my stop this time, but that needs to be part of your plan if this is a high odds setup, right? So this was your first entry from a very aggressive small little tip from the market that we closed above. Where I noted, right, what didn't you have on this bar? What you didn't have on this bar was what I noted in the room was that tick was consistently improving, but what I wanted, and guys correct me if I didn't say this or if I'm unclear, but what I wanted was I wanted some kind of push or test like this to show me that sellers were present, right? So finally, we get that push, and on this bar I say that bar should be the bar that traps all the sellers, right? That should be our tell, and then we should push to the other end of the range, right? So look at the challenges I have now. So now my entry, instead of being 84 1/4, gets pushed up. Right? Now my entry is over here. Okay, so now I have a choice. It's 84.50. My stop is 81.50. I still think that's a reasonable stop, but it's 3 points now. So again, if your stop is 2 points, I got to get it back to 83.50 or really 83 1/4 if your maximum stop is 2 points, right? You need an entry right here. Okay, so you don't get that, right? So if you can't cut trade size and you don't get the 83 1/4 and you recognize you have all the other pieces, again, here's where traders mess up, and I'm trying to get it so that they're clear. Traders mess up here by going, I'm going to do a middle of the road. I'm going to take this trade, and I'm going to use a 2 point stop. Now, today it worked, right? Because the swing low, if you entered there, this moved from 84.50 to 83.75, except there's a catch for that. Traders who tend to break the rules tend to get really nervous real easily, and my bet would be about 50% of the traders who bent the rules here were happy on this bar and scared to hell on this bar and probably closed the trade out. And if you're a retail trader, I'm certain you've done this. I know I've done it in my past. I break my rules. I compromise. I don't follow a trade plan. I see this bar and I go, up. That was a head. So in my head, because what am I most afraid of? So I'm not going to speak for anyone else. I'm afraid of getting stopped. I don't want to be proved wrong. I lead a group of people in making trading decisions, right? I have other people check on my trading decisions, and I have my family relying on me to make good decisions through the course of the day. I don't want to be wrong, right? I want to make money. Okay, so half that group would be my guess. So suddenly just close the trade out right here and said, I was stupid. I should have never taken that trade. Let me close it before it goes to the low of the day, right? The group that cut their trade size down, right, if they still weren't willing to accept that their risk stop was right here, may have still panicked out. The way to do this trade, in my eyes, is one of two ways. If you had to get the 2-point stop in, you limit yourself at 83 1/4, and if it gives it to you, that's great. And if it doesn't, you shrug your shoulders and go next time, right? The group that can take the risk here, right, you have to be committed to letting your stop get hit. If you cannot do that on this trade by taking that trade here and then tolerate the down bar like this, you should not take the trade is the answer until you are psychologically prepared to take the heat and the risk, right? Again, going to that sniper mentality. This gave us everything we're looking for. Over 45 minutes of consolidation, plenty of time to trap people, and to close above all the other bars with a big attempt to push and break the low, and we couldn't even break the last swing low, much less the actual low, right? So it gave us everything. We really got it to peak at the other player's cards on this bar, right? And still you can mess it. There's a million ways to mess up a trade, right? You still had to be committed at this point. And notice the last piece is the time factor. If you entered right at the close of this bar, you had 5, 10, 15, 20, 25 minutes and no profit to down in that whole trade. So you need to go into your journal, right, and go, geez, at the end of 25 minutes, the market's so slow, what was I feeling? Well, I can tell you what I'm feeling every single time I take a trade. Trade's going to stop. I'm going to look like an idiot. Why did I take this trade? I should have waited for tick divergence at the low. I'm going to go through this. I have a whole committee in my head. It's going to go through the whole list of things that I should have done to avoid the loss, right? And so what I've done in my head is I've created an alpha male chairman of the board, right? And that chairman of the board always says one thing. We've made a decision. We've clicked the button. The stop's in place. They either kick us hard in our backside or they pay us. That's the choice here. And our choice, this is the voice he speaks in my head, our choice is to simply improve our ability to read the market and get an entry, or it does not, or we do not take the trade. If we cannot improve in our ability to read the market in real time, along with all the other tools we have at our disposal, we should not be trading, right? That's what that voice says in my head. But you cannot be a sissy once you've picked that trade and elected it. Take your stop like a man or let it go to profit, one of the two. But don't waver. Traders who waver lose, always, because they never stick around for the win. That's the point, right? So the next thing I said was, as we came in, right, and I said, if you took this trade, right, first of all, you never took but from the entry point, which was 48.50, you never took more than 3 ticks of heat on the bid, right? So it wasn't horrible. I've still seen people panic out on this. Does anyone have a question to this? Hold on. Does anyone have any questions, guys? Am I doing all right so far? Has everything been clear? Clear. Okay, let's roll. So next I said we got this pop. This is right when I left for lunch. And I said, if you took the trade at 84.50, I would take some off at 86, right? 86 1/4, 86.50. And what am I trying to do? You have 3 choices in managing the trade from here. You can move your trade to true break even on balance. That would have meant you moved your trade right here to 84.50, which, by the way, has not got hit still yet, right? You've almost taken a round turn, but not quite, right? You can move your trade to net break even, which means you move your entry back. If you took 6 ticks from 84.50 to 83, which you still haven't got hit, you still got a chance to take that moonshot if that's what you were shooting for, up in towards 90 to 95 area. It's possible. It's certainly not, I don't know that it's probable today, but possible, right? Or, right, you just simply take your whole profit off here. You did a good job. You entered and you hit your target, except the only problem with that is what you want to try to do is align as much as possible we're doing two things simultaneously. By pulling up the stop, you certainly would have pulled your stop up from here to net break even, I would have said, from this bar. This bar, when things are perfect, right, when things are going well, this bar is it. This bar is going to launch us, and on some days it's going to launch us straight up, and it's never going to come back like it is right now. Now, some days it won't, right, which is why you want to leave the trailer. But the point is, what I'm trying to do is lift up my risk as quickly as possible, and I want to trade. So it's a little bit of a paradox, right? I always have risk, and I can always lose money when I'm trading. Any trade is 50-50, and it's in the probability of likelihood. Even a 90% trade is a 50-50 potential, right? But, and here's the big but, okay? So I know I can lose any time, but once I have a profit, okay, I consider that very valuable. And I am looking, if I got 100 trades like this, okay, and I was able to pull risk off, so but if my risk was originally 3 points, which it was, 84.50 to 81.50, right, I have a choice. I can either move my stop up to break even here and hope that it gets the 3 points, which would have been 87.50, which was achieved, right? Or, right, and by the way, the completion of the poorly auctioned area over here to the left, right? Or I can scale as I move along, move my stops up, which is my preferred way of doing business, till by the time I got up here, I've got all my risk off. I leave my stop at break even, and I hope like hell it just kind of goes up in here into this 91, 93, 94. I know that's not going to happen every time, but I know that it'll happen sometimes, right? And then I become allergic to losing money on that trade from that point forward, right? And if I do this perfectly every time, right? So here's the last challenge, right? In the room before, all we were working off of was to try to get perfect at nailing this entry off the top of the zone. And what would happen? We'd hit the top of the zone, and I would say, zone tested, came right to it, to the tick. That's the low of the day. Which, by the way, Jason, if you're still in the room, you'll notice at the low of the day, we had 115 contracts went off, which turned out to be a good low. In other words, you were asking earlier about what's a good low, what's a bad low. Very small number printed at the bottom, right? Only 175 contracts went off. It would be virtually impossible for most of us to get filled here, right? And you would have had to front run the zone. Okay, fine. There was a secondary entry, right? Now, even though I've mapped out what that secondary entry looks like, and I saw it in real time, I've got to do one last step. And pulling the trigger for me, when I've spent so many years trying to perfect the entry at the low, and now shifting gears and going, okay, now at the low, if I don't get filled here or I don't get the tick divergence here, I'm now pushing, this is now my entry bar, right? It's a challenge for me. It just really is. I see everything there and I'm going, geez, that's a hard way for me to take a trade. Even though I know that I've done the statistical work on it, that setup works, I've proven over and over, I've taken other trades on other days where I've shown over and over, this setup has a high degree of validity, and that it is good for usually at least 2 points, if not more. Off the lows, it's worth a lot more. And the problem is we've been getting this setup at highs instead of lows, where we were consolidating. Like the day looked like this, and we're getting these consolidations here, right? And this trade has been working here, and I've been taking it, right? I think I had 1 stop and 3 winners last week on this consolidation. But what I've said every time is, what we want that to occur on is a stretch to the downside. Now, in my ideal book, this trade is easy for me to take when we're 20 points in the hole. But we're still only 9 points, and now we're only 6 points in the hole where I'm taking it, right? So that means I have more visualization work to do on taking that trade. What does that mean? First, it means I go through my meditation session so I can get really calm. I pull up my pictures of my chart. I have them actually physically printed, and I kind of go like in a sequence, like those old cartoon books, so I can kind of flip through there and see what happened. And then I write down what my emotions are as I'm going through here, which is mostly, man, I do not want to I don't want to buy a position here and get stopped down here. I'm almost allergic to it, right? But it is the right thing to do. So this whole transition took probably from December, where frustration started, right? Or even going back to last year, where we would actually get the fills on the low. All of us would make 1 to 2 points and then watch it rip for 10 points. This is an anatomy. This is a draw up of exactly what we've been looking for to fix that problem of these long consolidations, and then what does it look like to break to the upside, right? So now the challenge is going to come, hey, how do I take that trade? And for every person, that's a very personal thing, right? All of us have different emotions. I'm yet to meet but one trader that goes, I've had one trader in all the years that I've coached that I've gone, that's the setup. And he goes, I don't care if it stops me, I'm taking it every time, and then actually did it. One guy out of all the people I've coached. He was a freaking machine. Any setup I showed him that worked, man, he took it and he never, ever got upset when he got stopped, ever, right? And he's the one who nailed, by the way, who nailed the 100-point trade both off of Brexit, and he nailed the 100-point trade off of Trump's election, right? And he just had no fear. Whatever it was, he had no fear of taking that trade, which is great, right? So I have some work. So this reveals to me the value in today. Even though I did not get paid here, this tells me I have a weakness, psychological weakness. Absolutely nothing was preventing me from taking a half-size trade there. Absolutely nothing was preventing me from taking a quarter-size trade there. So now I'm going to go to my journal, and I'm going to write out everything I went through, the internal debate in my head, right? And clearly the chairman of the board in my head did not have enough power, because not only does he need to tell all those other guys to shut up, we've already studied this process, and we know it works, right? But shut up. And by the way, Simon, click the mouse and take the position and put your big boy pants on. If you get stopped, you wait for that next setup and you take it again, because I've seen enough evidence as I've gone through, right, to know that that is a totally valid trade setup, and I should be taking it each and every time, except there's one exception. The bottom fifth of the market, this continues lower, right? But there's a safety valve there. What you end up with is a bigger push to a low on these pushes in the tick. See, it's self-adjusting, because when we break and we get this push down, it comes on huge tick, and then we roll to the downside with it until finally you get this setup, and we've pushed all the way down like we saw this a year ago, January, right? And then we were getting the divergences at the end of the day, and then you just had to adjust, as I showed the other day, for the 10 and 20 point ranges that we were getting at the very bottom. You just had to adjust trade size to take that trade, right? So then lastly, we have pushed. What haven't we done today, right? What's the last piece that tells me at the end of the day, this is a crap day? We failed to break IB high. We failed to break IB low, which usually, this is pretty typical summertime trading, which is another reason why I'm pushing so hard to not only for myself, but also to teach y'all and mentor y'all, because we're going to get a lot of this in summertime trading where the market's lethargic, not pushing hard in one direction or another, right? And you're going to have to be able to realize that people get trapped. And by the way, in summertime, you're going to see this trap, and you're going to see it come all the way down here, tag or one tick below, and then make the push all the way back up, right? So the slower it gets, the more variation there is on this. And then lastly, we had a clue, because look, this broke to the upside at 11 a.m., right? We finally had that break between 11 and 11:15. Your last entry, by the way, was right here. I think it was a little late. If you weren't willing to take it here, I really wouldn't have been willing to take it there either, right? But if you look at that same time on NQ, here's 11 a.m., right? Look, NQ's already breaking up to the high of the day at 11 a.m. At the same time, that ES, people have been still trying to sell into the hole, thinking we're going to roll to the downside, right? NQ already told the story that, hey, we're likely to pop. NQ has broken IB high, right? And we broke to a new high yet again at 56.40, right? So what's likely to happen with that correlation between ES and NQ is that ES, even when it's having a difficult time pushing, ES is likely to follow, and it's actually been highly unusual because NQ has been pushing so hard that ES hasn't followed more closely, and we've been in this balance area, and it's thrown the trading off even a little bit more. So that's the trade setup. Even once you know it, it takes mental work, journaling, homework, and a commitment to be willing to accept the stop on that trade. If you can't get past the fact, and it's hard, right, that you might get stopped, if you can't get past the fact that you might get stopped, then you have a real challenge. Guys, if you give me 1 second, I'm going to pause this and I'll be right back. I take this call from my wife. Okay, so that's the day, and I think that's the day in summary. That's what the only thing I would have improved is I would have taken the trade here. I kind of hesitated, and I was short CL at the time. For me, it's ADD and dyslexia. It's hard for me to focus and get both markets right simultaneously. But we had this right. There's the little arrow where I pointed out before I left for lunch. We had this dialed in, right? Now we just got to get to the next step of executing it flawlessly. Does anyone have any questions? You're welcome. The only thing I can stress is do your homework over and over again. I can't tell you how much time I spend up here outside of trading hours going over the same patterns in detail, step by step, and matching up my emotions with the trade. That's the key to the thing. I want to know what all the objections my brain's going to come up with to taking the trade, and I visualize it both ways. And I try to visualize taking the same trade 10 times. I try to go find 10 examples of the trade, right? Some that failed, some that worked, hopefully within ratio of what my numbers show, right? If I got stopped, right? If I got stopped, how did I feel about it? Did it throw me? Did it ruin my day? Did it ruin my week? Can I get the stop and keep my mind frame in? This is one of many trades. I will take this trade again. I know that I've done the homework to prove it's statistically advantageous to me and I've got the correct read. Or do I go, I'm scared to take this trade because this one might stop and it's got to just look so photo perfect for me. That's the only way I can take the trade, in which case the funny thing about that and doing it that way is you probably force yourself into trading errors. You're very welcome, John. So I hope that helped you guys. I have it recorded. I'll obviously post it later. But for me, this is a very important trade. It's actually more important to me than taking the top of the zone is now. And the reason for that is because of the quick extension you get out of it once you get it right is very, very valuable. And just realize when we get into wider price action, right, that these stops are going to turn into 5 and 6 point stops just because of the wider range, right? If we get to a 25-point range, by the time you get to this point, this is likely to be a 5-point stop. So in your trade plan, when you're working on setting this trade up, right, you need to go in there and go, how am I going to handle the 5-point stop? Do you go back and do, well, the most I can afford is 3. It's got to pull back. If I miss it, it's okay. No, I'm okay with the 5-point stop. I've worked it in mathematically. It fits because that's going to be the variation the market's going to throw at you. So anyways, guys, that's it. I'm going to go to the hospital actually and take care of go to the doctor's appointment with my little babies, and I have no idea where we close today. So we haven't broken IB high and IB low. That's a very rare day not to have broken either one. And on days like that, stay the hell out of the middle of the range. It just gets swept. You can see people on both sides try to take the 50-60 on this, and it's a disaster. So anyways, thank you guys. Randy, you have a question? MFE and MAE. I agree, but that's going to fluctuate based on where you are in the range, Randy. So anyways, guys, my name is Simon. I'm with Trade and Perform Coaching. If you'd like to come in and see what it's like to be in the room for a couple of days, it's more of a mentoring room than it is a trade calling room. I'm trying to help traders get better at being traders. Send me an email, and I will extend a 5-day visitation. And those who joined us today, thank you all very much. I'm very grateful to have you on the room. Meditate. It helps slow your mind down. It gives you much better reads. Talk to you later, guys.